Improving your credit before you buy a house is really one pillar of how to become mortgage ready. You first have to understand, what am I trying to improve it to? With different loan programs having different credit minimum requirements, we have to know where you're at now and what to do to get there. A common thing that a lot of people do is they seek out credit repair. And I'm here to tell you, the best credit repair that I've ever seen done is when someone actually decides to take charge of their own credit and do it themselves. To do that, you need to have your credit report to know what are my credit scores and what are the things that are impacting my credit right now. Your credit score is going to be impacted by the balances of your credit cards and the credit that you're using. The different credit mix. Do I have installment loans like a car payment? The other aspects are going to be, do I make my payments on time? When I make my payments, do I pay more than the minimums? And that's not everything, but those are the big things that are going to impact your credit. The funny thing about credit is people want to give it to you, but they don't want you to use it, or they ding you on your credit for it. You want to make sure that you're working to get your payment balances down. Now, it doesn't have to be zero. Because again, in trying to buy a house, the few $1,000s that you're wanting to pay off a credit card all the way may be better going towards the actual down payment on the home. You want to look to try to get your credit below 30% utilization. So if you had a $1,000 limit, you don't want to have more than $300 spent on those cards. The other areas you want to look at is, am I making my payments on time? That is one of the biggest factors in approval and credit score. Is if someone does give you credit or someone does give you a loan, how responsible are you with making the payments? Because in the grand scheme of mortgage approval is, what is your ability to repay this loan? So if we're not making our payments on time, or we don't have a recent history of making on-time payments, we really want to stretch out a period of time where we're really good and really on the ball and making all of our payments on time. The other aspect is, what different credit types do I have? You know, if you're someone who has a car loan and some student loans, but no revolving credit like a credit card, it may make sense to open up a small credit card that we utilize for gas or groceries that we pay off every month, just to show that not only do I have a fixed payment that I can make, but as I use a revolving credit card, I can make those payments as they fluctuate as well. So if you're looking to get mortgage ready and as a part of that, improve your credit score, let's get your balances low. Let's look at how many different account types you have, and are you making your payments on time? If you're not, then we need to put you on a budget that says, here's how much I can make, my payments, and make sure that you're showing those lenders that you're committed to making payments back to them for the money that you borrowed.